Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to build on its 3 days of gains as investors focus on this week's data, particularly the US September job report or the non-farm payrolls set for release on Friday, which could influence expectations for the Fed's November 6th-7th meeting. Looking to Monday though, the US Federal Reserve Chairman Jerome Powell indicated that the central bank would likely hold off on extra large interest rate cuts if the economy remains robust. Speaking at the National Association for Business Economics conference in Nashville, Fed Powell expressed his expectations for 2 additional rate cuts totaling 50 basis points this year, assuming the economy progresses as anticipated. The Fed began its new easing cycle earlier this month with a notable 50 basis point rate cut. So turning to the technicals, the market is now edging higher with 4 consecutive bullish candles. The Australian dollar could reach its target of 70 cents before profit taking comes back into play, with any pullback now views support around 68.45 to 85. As we look upon the euro, we can see another failed topside attempt at 112 figure 15 as the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounds off 140 to 180. With a range of economic data this week, investors will keep an eye on the ISM manufacturing PMI, the JOLTS job openings, the ADP non-farm employment change, and also Germany's preliminary CPI. Now keep an eye on these technicals because they have buckled somewhat after another attempt at, as I mentioned, at 112 failed and is posted an engulfing candle and therefore could see a breakdown from 111.25 to the lows around 110.20.30 before likely seeing a rebound and look back up towards that 112 area, and if breached above 112.15 looks towards 113.5. Dollar yen has been whipsawed and most likely will continue following a vote confirming Japan will soon have a new relatively hawkish prime minister. The market is now posted an engulfing candle which holds at the moment that could see a move down towards 136 to 138. But a break above 145 would negate this candle and maybe even see a squeeze on towards 148. So therefore I do stress that traders should remain cautious, closely monitoring signals and adjust risk strategies as market volatility is expected to continue. Like the euro, the pound took a challenge to that 134 and rejected. Now posts a gravestone doji, which is bearish. That could see a further weaker play into this week and look towards the region of 133.45 and down towards 132.80, where I anticipate a bullish return. And if so, would see the market eventually take out that topside level around 135 to 136 as initial target. Profit taking came back into play when it looked at gold, and now the market looks towards the level of 2,626. I'm not going to get overly bearish here because I still feel there is bargain hunters in this market and therefore could see a bounce back towards 2,650 and maybe eventually reaching its target of 2,700 and reassess from there. Wrapping up with oil, the market's bounced didn't continue on and has left a long-legged doji, which means indecisiveness. Nevertheless, we still need to see a break above 68, 65, 70 to support the rally on to 70 to maybe $72 a barrel. Failing to break 68, 65, 70, well, therefore would leave a bearish outlook and then pull back towards the bottom side of its range, somewhere around the region of 64.60 to $65 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.